Hi, it's Frank Leo. And I guess by now you've seen some of the sensational headlines that are out there about the real estate market. Well, I'm here to break it down a little bit for you so you have an idea of how that's going to affect you and your family. We've been told that July last year to this July, comparatively, we are down in the number of sales by 47%. Big number. We understand that sounds like a huge number. But remember again, last year was a record sales, so we expected a downturn. This is very much normal, nothing to surprise us, so don't take it too hard. It sounds great, it's a news story, but reality is that was what happened in June, 41% down. It's consistent. Now, from June to July, there's a 24% decrease in sales. Now, that's a seasonally adjusted number as well, because you have to remember, we've been pretty much unable to take vacations and go out because of the circumstances the last couple of years. So families have been really excited about getting out there and enjoying the summer. And July is the first month that the kids are out of school. So, of course, they were out having a good time and not really looking at real estate. So that's why maybe the sales are a little bit less than normal, but that's seasonally occurring year after year after year. Now, let's talk about the price. I think everyone wants to know what the price is. Are we going to head for a crash? And what I'm going to share with you is the numbers. I mean, simply said, from June to July, sale prices were down by about 6%. It's a number that's there. But if you look at it from last July to this July, we're actually up 1.2%. So the reality is the market is not crashing, but maybe readjusting, getting more into normal. What's changed that's really affected us is interest rates. Interest rates have gone up a lot. We were at 0.25%, not 1%, not 0.5%, 0.25, a quarter of 1% for the Bank of Canada. Very low. They were giving away money. That's not sustainable. And so what happened because of that, there was a tremendous amount of inflation, and we had situations like in January and February, if you remember, people were fighting for homes. Prices were going up every day. Multiple offers. People saying, can we stop this? It's crazy. It's not sustainable. Exactly. And now that's what's happening. We're getting to a new norm. So is it going to crash is the question. Well, you know what? There are less active listings in last July than there were the year before. Less. And there's not as many homes for sale as there were last year either. So what's that telling us? Because especially at the beginning of the year, there weren't enough homes for these buyers. So how can this be happening? Well, this is what's happening. Buyers have been distracted, either because they're on holidays or they're on the sidelines waiting to see what happens. So there are all these buyers. The cost of building has gone up. The cost of permits has gone up. The cost of materials has gone up. Housing can't go down tremendously. But what has happened? The cost of borrowing has gone up. So people who are first-time buyers or anyone who needs a mortgage has to realize that, yes, they may get the property for a little bit less, but they're going to pay more for the money that they borrow from the bank because the interest rates are higher. That means that the amount of money they have left at the end of the month is less. It's actually costing you more as time goes on because the price may be lower, but the cost of borrowing is higher. So now to avoid that extra cost per month so you can get in to the market and start paying yourself, paying your mortgage, whenever you're able to buy as a first-time buyer or someone needs a mortgage, jump right in. Now the people who are going to be probably the most important to understand what's happening with the prices adjusting downward a little bit are the retirees, people who are going to sell and not buy anymore. Well, those people are the ones who are going to lose the most. So if you're going to sell and you see prices coming down, sell sooner. Get your money out because that makes sense long term. You'll be able to have more money in your pocket. If you wait longer and adjust, you're not buying anything for a lower price, it's going to cost you. The people in between who are buying, either moving up or moving down, if they buy for less, they get less. If they buy for more, they get more. So that balances out. So in reality, this is just a settling down of the market. We know that interest rates are more at a normal number, area, range, whatever you want to call it. That's where they've been over time. And so that's great. The one thing you're going to look at is inflation being controlled, because that's the hard part for families, that they can't afford to buy the goods, the food, the living standard is coming down if inflation is high. And what the government and the Bank of Canada is trying to do is keep that level of inflation as low as possible so that we can continue to thrive long term. The answer to the question is whenever you're able to get into the market, it's time in the market that's going to get you the best results. So real estate is the way to go as soon as you can get into. Don't try to time the market, because that could be a big mistake. Until next time.